three things this morning. Number one, the 10-year bond yield. Number two, the financials being the stocks. And then finally, the Kospi in South Korea, which obviously continues to matter. First, on the 10-year bond yield, we get capitulation today. So we get capitulation on the two big things that tend to matter for bond yields, which are indeed growth and inflation. And, of course, 10-year bond yields do not like the deflation. So the deflation gets you 1.71% on the 10-year. That is down, 21% for the year to date, and it's only the 16th of January, down 43% since we started making this call a year ago. And again, we'd reiterate the call this morning. While it is oversold, and this is the level, I think we've said 1.7% multiple times, now the level for after 1.7 is 1.69, 1.68, 1.67, and people are going to try to make the bear case on bonds, which is obviously very unprofitable at this point. Now, the second point is financials. What do you do when bond yields are falling and yield spreads are compressing? You short the financials. I mean, that's pretty straightforward. For the year to date now, the KRE, which is, of course, the regional bank index, is down a full 10% for the year to date. That'll leave a mark. And then, of course, the financials, XLF, more broadly, are down 6.2% for the year to date. So, again, we'd reiterate to stay away from the late cycle stocks, which obviously include anything that's employment or inflation related, which includes energy, financials, and industrials, and those are the worst performing sectors in the S&P 500 for the year to date. On the other side of that, of course, the things that we like, healthcare, consumer staples, and utilities, are up by a lot. Now, finally, the Kospi. So, again, the Kospi is an explicit signal that Asia is slowing. Now, anyone who's been there knows that, but the reality is that the Kospi continues to signal again to the downside. 1.4% drop last night, testing its lows again, 12-month lows being. So, again, whether the read-through be Europe or Asia or the U.S., again, you have growth slowing, which is why the 10-year bond yield is hitting fresh new lows. And those are your top three things.